Welcome to the Knakal News Network. Knakal News Network is brought to you by Massey Knakal Realty Services, New York's #1 building sales firm.
Hi, I'm Jon Hageman, Sales Team Manager for Massey Knakal. Welcome to the Knakal News Network. Today I'm here with Bob Knakal, Chairman of Massey Knakal. We're going to talk about the first quarter sales volume in Manhattan. Bob, tell us what's happening in Manhattan in the first quarter of 2014.
Hags, in the first quarter of 2014, there were $9.6 billion of investment sales activity in Manhattan. Annualized, that would be about $38.5 billion for the year, which is a very, very strong total. If we look at that, that's up about 34% from 2013, which is a very healthy increase. But if we look at Manhattan in general, the market is doing very well, but not nearly as well as the overall market is doing. So if the market stays on that $38.5 billion pace, will be about 27% below where the Manhattan market was in 2007. But the fact is that the $9.6 billion that occurred in the first quarter of 2014 is still the highest first quarterly total we've had going back to 2007. So the market still has pretty good pace.
Bob, we talked about volume now. What about the number of properties sold in Manhattan in the first quarter?
Hags, in the Manhattan submarket, 229 properties traded hands in the first quarter of the year. That is up about 14% from where we were last year, because if you annualize the 229, we're at over 900 properties sold. So a very healthy increase over where we were in 2013. And that also is the highest quarterly total for the number of properties sold in Manhattan going back to 2007.
Bob, are there any particular product types that are performing better than in the others?
Well, I think the two sectors that really are performing well are development land and office buildings. If you look at the total number of properties sold going back to 2009, office buildings and development sites were selling at a relatively slow pace, but we've gotten such traction in those sectors over the past couple of years that so far in 2014, the percentage of the total number of sales represented by office buildings and development sites are each triple what they were in 2009.
So Bob, we talked about land and office. What about the retail sector? It seems like I've seen some record pricing in that submarket. Can you tell us what the pricing's looking like?
Yeah, retail properties have been absolutely on fire, and I think it's indicative of the fact that retail rents continue to escalate in the best areas. And I think if you look at the recent consumer spending numbers that have come out and consumer sentiment, those numbers are very weak. So it's almost counterintuitive that high-end rents are doing so well, but those rents are going up very significantly, and that's leading to increased values in the retail sector. And the retail sector is one that is experiencing that same very positive wave.
Bob, we talked about the submarkets, land, office, retail, how those are performing. What's happening to the cap rates?
Cap rates are continuing to compress in Manhattan just as they are citywide. At the low point in the marketplace in 2010, cap rates reached an average of 6% in Manhattan, and that also seems like a distant memory. But we've slowly and steadily seen cap rates compress. Last year, in 2013, cap rates averaged 4.4%, and so far in 2014, average cap rates in Manhattan have dipped to 4.1%. And as we talk about cap rates, it's also important to note that cap rates vary very, very widely, and cap rates are inversely correlated to the upside potential in a property. So the more upside there is, the lower the cap rate will be. It's very dangerous to take these average cap rates and try to figure out the value of a property. You really have to look at each property separately. In summary, while not doing quite as well as the overall city market, the Manhattan submarket has performed very well in the first quarter of 2014. The dollar volume of sales in the first quarter was the highest total going back to 2007, as was the 229 properties that sold in the first quarter. We expect the activity in the Manhattan submarket to pick up as we continue throughout the year.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.